Hello everyone. In this video, we will discuss what is fundamental and technical analysis. Fundamental analysis is done to identify the intrinsic value of an asset or security. A fundamental analysis involves understanding the factors impacting companies' valuation from multiple lenses, macro as well as micro. The purpose of fundamental analysis is to estimate the value of the security and then compare it with the current market price to decide whether the security is under or overvalued. And does it make sense to invest in the security at the current price for long term? Fundamental analysis is about long term investing and value creation. A fundamental analyst looks at multiple factors in detail before making an investment decision in a company. He looks at historical performance of the company, management, and the strategic priorities of the management, industry and economic scenario, and implied expectations in the current valuations of the company. Analyzing historical financial performance of a company is important to understand the business and how the company has performed on growth, margins, return on invested capital during the selected time frame. A fundamental analyst usually looks at historical financial performance of the company and peers ranging from 5 to 10 years and drivers behind the under or outperformance. Apart from the performance, a fundamental analyst also looks at the balance sheet strength of the company by looking at liquidity, leverage, coverage ratios, credit rating during the analysis period. Understanding the management and corporate vision and strategy is equally important. A fundamental analyst looks at the management history, education, and also tracks the announcements made and how they have delivered on promises made to investors to form a perspective around management credibility. A fundamental analyst looks at company strategy or vision to understand the priorities of the business, whether it is increasing growth through introduction of new products or increasing sales of existing products, whether it is cost reduction to improve margins, enhance returns, whether it is improving customer satisfaction by providing omni-channel experience or reducing balance sheet leverage. Understanding the industry and macroeconomic scenario, consumer preferences help determine the market momentum behind the stock price performance. For example, the current environment is of low economic growth due to COVID-19 pandemic. Global growth is projected to remain flat to negative for next 1 year. Industries like automobile, metals, oil and gas would be negatively impacted while pharmaceutical and healthcare industry is positively impacted due to rising demand for medicines. Before crisis, the pharma industry in India underperformed the broader market due to several industry related headwinds like pricing pressure and regulatory issues. The insurance industry in India may also see a surge in demand due to the COVID-19 crisis. Government policies, regulations like providing relaxation to select sectors also impact the stock price movement. Therefore, it is important to keep oneself up to speed on both the industry as well as economic scenario. Value of a stock is driven by growth, return, and investor expectations. Understanding expectations around future performance that are embedded in the current stock price is important. This helps the fundamental analyst determine how the stock's value would change with change in future performance. In short, fundamental analysis focuses on understanding why the stock price is what it is. It is all about value creation from long term investing. Technical analysis involves forecasting the future price movements of a stock based on understanding of past price movements. The technical analyst looks at the short term and long term stock price charts and indicators like resistance, support, relative strength indicators, etc., to predict the future price movements. Technical analysis applies more to short term investing, which could range from intraday trading to 1 year investing and taking advantage of the stock price movements. It focuses on what the stock price will be rather than why. Technical analysis is based on three assumptions. The first assumption is that current asset price discounts all material information which is known to the market. The second assumption is that the stock price moves in trends. Once a price trend is established, the future price direction is more likely to be in that direction. A technical analyst buys when stock prices are low and investors' fear is at peak, and sells when the stock prices are high and greed is at peak. The third assumption behind technical analysis is that history tends to repeat itself. In technical analysis, the charts and patterns found in the past often gets repeated. Technical analysts use different indicators to identify the patterns in the stock price. In short, technical analysis focuses on what the stock price is and not why it is. It is more about short term investing and taking advantage of the stock price movements. In summary, fundamentals are like fuel in the car, while technical indicators are the driver. Fundamentals decide how far the stock price can go, while technical indicators give the direction to the stock price movements. Hope you enjoyed the session. Thank you.